Good evening, ladies and gentlemen. This is Barry Norman on behalf of ITA Academy and sponsored by Option Rally this evening. Welcome to our class, Beginning Charts and Graphs. Now, charting and graphing is probably one of the most important fundamental tools that you can learn to trade successfully in the markets. Regardless how you're going to eventually trade, regardless of how much knowledge you're going to acquire, no matter how you're going to apply strategies, no matter which markets you're eventually going to trade in, charts should always be something you know. You can start at a very low level and advance as much as you want or stop at any place you want. If you imagine charts as like a roadmap, and you can start out with a very simple map, like for instance what comes on a wedding invitation, it just gets you to the chapel, or an elaborate one that comes in a atlas. Okay, all you know is the more elaborate the map, the more you can read it, the better you can get to where you're going, and the less likely you're going to get lost. So even if you're going to be a fundamental trader, you should still be able to look at a chart very quickly and ascertain some pieces of information. A chart, and even if you don't believe in patterns, you don't believe in technical analysis, a chart can still stop you from making a mistake. It can also help you learn the personality of the asset in which you can be trading. But again, it's up to you how much effort and time you want to put in charts. But you should never be trading blindly. So there are three primary types of charts. Okay. There's all kinds of offshoots. There's all kinds of odd things out there. But we have basically a line chart, a bar chart, and a candlestick chart. Now, candlesticks are the buzzword in the retail Forex markets. Okay, and you're going to think tonight, because I'm going to be very negative on candlestick charts. Not because they don't work, not because they haven't been around for ages, but candlesticks require a lot of knowledge. And unless you're going to put the time and the effort into learning them, they can mislead you very easily. So the basic chart, the bare basic, is what you see on your screen now, which is called a line chart. And a line chart is simply a grouping of dots. If you're looking at a 30-minute chart, the price of the asset at the close of that 30-minute period is put as a dot on the chart, and then all of those dots are connected to form a line. Now, some charts will use the median price, some will use the opening price, but the most common is the close of each period. But it gives you a very finite piece of information, because all you're seeing is the close. You're not seeing how big the market swings are, and you're seeing this one precise moment or second in time. But a line chart gives you a very good, quick visual understanding of where a price is going. That's it. From here we go to the bar chart. And to me, a bar chart is the most valuable chart that you can possibly use. Most traders, most professionals use bar charts. Now, the thing about a bar chart is this one little line that you see here contains a great deal of information. Now, this bar chart you're looking at right now is for the same exact time period and the same asset that we were looking at for the line chart. But now you get to visually see a lot more information. You see very precise swings of the markets. You see highs and lows. Your eye can very easily see very strong patterns. Like for here, we can see a very good downtrend where all the highs were on a straight line and all the lows fell in a line. Here we can see a beautiful sideways trading range, because look at this. The highs over here and the highs down here were all the same, and the lows all lined up. So you can see a lot more information. Now we'll talk about what information is contained in each one of these lines as we move forward. But from here we go to the Japanese candlesticks. Okay. And what you have here is the Japanese candlesticks for the same period of time, okay, for the same asset, okay, but it is misleading because it is colored. And these candlesticks, especially a beginning trader, in fact, no matter how experienced you are a trader, the colors of the body of the candles psychologically have an effect on a trader. Because you see lots of red, so you see negative. You see lots of green, you see positive or ups. Okay. Where the color coding isn't as important as the contrast and the size and the shape of what's called the body of the candle. And in candlesticks, each one of these bodies, like here we see a candlestick. Let me get my marker back on here for you. Here you see a candlestick that's got no top wick, and it's got a very, very large body. That has a precise interpretation. Here you have a candlestick with no body at all and just a high and a low. Okay. All of these have interpretation. There are 30, I believe it's 32 different interpretations of candles. And if you're not going to learn these interpretations, then you're going to get misled because it is not the color coding. It is the shape and the size and the different types of candles and what they mean when they're next to each other are what give you the strategy or the trading system to use for candlesticks. Okay. But all three of these charts cover the same asset at the same time. So the bar chart, let me go backwards here. The bar chart, like I said, each one of these lines gives you a valuable piece of information. Now, what you have in each one of these lines, depending on the time period that you're looking at, if you're looking at a 5-minute time period, you're looking at a 15-minute time frame, you're looking at a 1-day chart, whatever that time period is, it takes the high for that time period. Well, first it takes the open for that time period and puts a doohickey to the left. Then it takes the highest point it reached in that time period. So say we're looking at a 15-minute time frame, a 15-minute chart. So the beginning of that 15 minutes, it puts a doohickey here. At the close, the end of that 15 minutes, it puts a doohickey to the right. It then takes and puts a dot at the highest point that that asset reached in that 15 minutes and a dot at the lowest point it reached, and then connects them with a line. And all of that is contained in one visual clue on the chart. So you're getting a lot of information in this chart. Now, the other thing you get, and the easiest way to explain this, if you're stepping up the ladder, so you're stepping up from the open to the close, that's a bullish signal. If you're stepping down the ladder, that is a bearish signal. But it contains the open, the high, the low, and the close. So often a bar chart is also referred to as an OHLC. So if you hear somebody or you're looking at something and it says the OHLC chart, it's the same as a bar chart. It's just a different nickname. So this is why the bar chart is so valuable. Because when we're looking at candlesticks, you'd be amazed they're almost identical. See, with a candlestick, what you do is, there we go. With a candlestick, you put a complete line across at the open, a line across at the close. You still put a dot at the highest point, a dot at the lowest point, and then you connect them to the lines you're drawing for the open and close, and you have the same exact information that is contained in that bar chart. With the exception is you now have this body. Now, if this body is, if the close is higher than the open, which is the same as it was in the bar chart, or you could say it was a step up the ladder, you would fill this candle in with the red or the black or the red and the green or the white and the yellow, whatever color combination you were using. If you step down, you would fill it in with the opposing combination. So it's the exact same information as you would be getting in a bar chart, except with the color added. Now, unfortunately, all of these charting services, especially the free ones today, are reaching out to the retail Forex markets, basically. And they're reaching out to these buzzwords, and they're being designed by non-traders. You have graphic designers and all these people that are entering the markets that are responsible for providing all this stuff that don't know anything about trading. And they build these charts. And because the new Java charts have everything, all the properties and settings, the new thing is they're taking bar charts and coloring, just like they are candlesticks. Well, the first thing I do when I get to charts, I turn off the colors for the bar chart, because that is not part of the bar chart system. It's just something these modern guys are doing as Forex reaches out and it gets bigger and bigger and bigger. These people developing these charts, they're all trying to be unique, and they're all coming with new ideas. So then now the newest thing is you're seeing all these charts with colored bars, which is not appropriate, because then there's no interpretation for those colored bars. Okay, there's no strategy for those colored bars. Okay. Now, once you've decided and know the difference between the charts, we come up to a very important area, and that is time frames. So when you hear me talking about a 15-minute dot on a chart, or a 30-minute or 30, these are the time frames that each one of these lines, dots, or figures are put on the chart. And of course, they can only fill your screen. So a 15-minute chart, okay, has lots of these details for 15 minutes, but you can only get the last 24 hours on a chart, because you got so many 15-minute time frames. But your time frames are very important. Time frames should fit the type of trading you're doing, and also time frames will help you get clues into the personality of the asset you're looking at. And time frames will also let you see other views, or give you better perspective of the asset you're looking at. So you can see trends, and you can see short-term, long-term, and medium-term trends by using multiple time frames. So viewing a currency pair in multiple time frames can help you find good entry and exit points depending on the strategy you want to use. Day trading a currency can make a lot of sense for traders looking to take maximum advantage of daily volatility, but keeping the daily trend in mind can help a day trader focus on the bigger picture. So for binary options, we're best sticking in 15 and 30-minute time frames, because you want to have your time frame fit the style of trading and the time frame that you are dealing in. But again, Forex trading attracts many different types of traders with many different systems. And if you want to trade a currency pair or a commodity, it's best to become as familiar with it as possible. And viewing the currency pair in multiple time frames is part of the process of learning its personality and understanding how it is trading at current. So let's go pull up a chart on the screen. Okay, give me a second. Let me get a chart up here. And, okay, let me real fast. I'm going to turn this chart over to gold, because gold is one of the best examples. So if we were to look at gold in a 15-minute time frame, we would see that gold has been trading on a short-term trend and an overall downtrend. But in a medium-term trend, or a longer-term trend, we can see it's been trending upwards. Okay. Now, this is only over the current day, but the price has jumped up. We see it hit a peak and then it's been trending down this afternoon, then it recovered. Okay, but these are what's called short-term trends, but they're more appropriate to binary options. But to learn the personality of this asset, we have to see it over multiple time zones. You do this by clicking on the time frames. Now, if we were to move this out to a one-day chart, we would see gold on this chart coming back into May. Well, look at this. We see that gold has actually been on a downtrend since May. Now, you might have forgotten about this because all recently, ever since the Federal Reserve held interest rates in September, gold has been skyrocketing back up. And everybody's been talking about gold trending up, and it's back up to 1140 now. It hit almost at 11. It hit 1150 for a minute today. But overall, in the medium term, it is actually in a downtrend. But if we were to go back a little bit farther in the charts by simply moving to a 1 month chart, look at that. Gold is actually in a long-term uptrend. Now it was in a much steeper uptrend. Let me get my marker back up here. Okay, when it came all the way up here. But when we look at it from 2006 forward, it's still in a very strong uptrend today. Now we can see it peaked here, and then it's been in a downtrend since 2012. Did you realize that? That gold has been steadily declining since 2012? Well, it has been. Okay. Now you have a better perspective and better understanding of how gold is currently trading. So what we've got now is we have the type of chart, we have the time frame that we want to look at, and now we've got to learn how to put more information on this chart. Because what we have now is we've got a map. So we know how to get from point A to point B. We know we want to put our car going north. We know we're going to go 3 miles or 3 kilometers. We know we're going to get off at exit 20. Now, by looking at these charts in different time frames, we may be able to come up with the time of day that is best to travel. There's least congestion. But every time we put another line or another piece of information on this chart, the more precise our roadmap gets. You know, you might get it down where you know it's a 2-lane road, a 4-lane road. You take the third exit off the roundabout, you go 1.2 kilometers, make a right, go to the second stoplight and make a left, and then you see the parking lot on the right-hand side. You get to know it much more precisely. Okay, it is the backbone of your trading. But it's up to you how far you want to take it. But just getting to know the asset you might want to trade, or that you're trading, and even if you're trading strictly from fundamentals, you should know how to read the basic charts. And we are talking about real basic stuff here. It's not very complicated. And today with the modern charts, when I started charting, we had to do everything by hand. And we had lines and lines and books of graph paper, and we're constantly putting dots in chart and using straight edges and connecting them together. Today, it's all done by, these Java charts and by computers, and it's instantaneous. So there isn't much in learning the charts. Okay, so now we have the two things. We've had the different types of charts, and we have the different time frames. Okay, so let's go back to my PowerPoint, and let's go see what step number 3 is. Okay. Hold on, I'm going to bring my PowerPoint back up on your screen. Be there in a second. Okay, so one of the best reasons to learn to learn how to read a chart is so that you can properly apply technical analysis. Now, a lot of people freak out when they talk about technical analysis. They think it's a complicated science. But there's real basic technical. Trend line is technical analysis. Support and resistance are technical analysis. Okay, and there are very easy charting systems today. With all of these easy charts, it's easy to drop your technical analysis tools or overlays directly on your chart. Okay. You don't have to do the calculations any longer. You don't even have to put them on the charts. Everything is done for you automatically. Okay. Except one of the most important things, and that's trend lines. And trend lines are the crucial part of understanding how a market is moving. They will help you predict the future support and resistance of the markets. Now, trend lines are very personal, but they're very important. So we have an entire class called The Trend is Your Friend along with Support and Resistance. And we will teach you how to start putting more information on the charts, because all of this as it goes on your chart will help you build this roadmap to get where you want to go without getting lost. But before we can do that, you need to learn some basics of these new modern charts. So let's go back to the charts again, and we're going to talk about how to use these charts. Because I find a lot of traders are completely lost, and today all these Java charts are a little bit complex, and they're all slightly different, but they all have standard features. So somewhere along the lines, they're going to give you a couple things. They're going to give you the assets you want to trade. Here, that's right here in the top box. They're going to give you the time frames, which you can get it by clicking on them or use the drop-down menu to get something more precise, but they're all available here. Okay. Then you have the different types of charts. You have bar charts, candlesticks, hollow lines, and like I said, some of these come up with long, and all of these are just simply variations of the charts you want to use. So we're going to stay with the bar chart here, and then from here they give you some way to change the chart properties, where you can colorize them, you can set the scales, you can set the backgrounds, okay, and you can set the times. You should always make sure, now most of the new charts default to your home IP time zone, but you should always make sure that you have your charts in your current time zone. They're always going to give you the most recent number anyway, but when you're looking at down at prices or you're trying to see an economic, then let's move this to a 30-minute chart, and we're trying to see what affected this asset, or why did gold soar up here at this precise moment. Okay. Well, you need to understand what time it is, because you need to look and see what happened at that time. Okay. So if you got in the wrong time zone, you're going to be looking at the wrong event at the wrong time. So we can see that this was at 6 p.m. GMT time, or 6 p.m. I think these default to London time. I don't know. But this is when the FOMC minutes were released today. Now, investing.com is free charts for using it. They also put on their news articles directly on the charts. Unfortunately, there's no way to turn these off, but they're a distraction. But on the free charts, we don't have much of a case. So you can set charts in any colors you want. You know, we're not talking about, if you want to see all of these lines in blue, you can set them all in blue. You know, you could set them, okay, to be the bar, but you can say, I like blue better than I like black. So we can change them all to be blue. You can set them to what you're comfortable with. You can set the backgrounds. Okay. So let's go back to black right now, because the blue is too bright for my eyes. But every one will give you some choice to do settings. Okay, that's the easy part. Now comes all of these tool stuff. Now, if you're a beginning trader, or you're somebody who's just using charts, or you're just somebody who uses charts as a secondary tool, all you need to do is know a couple things: where to find a trend line and how to put it on. You simply, whatever these are, you have to click on it to activate it, and most of them will give you a way to set the color, set the width, and all those kind of things. And so we're going to make it a red trend line, and then we're going to go down and find the number we want to put on, and we're going to click on that trend line, and we've drawn that trend line. And I'm not actually building an actual trend line, but we've got it on the charts, and it just requires a lot of clicking. It's no different than any other computer program. We can get rid of it. We can do whatever we want. Okay. Now, that's some of the nice features of this. The nicest features is we can do more advanced stuff. Like today, we can actually use a trend channel, which is becoming the more popular way of doing trend lines, and allows you to do a support and resistance line trend lines in a channel using the same angle for that zone. And then you can lock your charts and just lock in what you've done so you don't accidentally erase it. You can get rid of it, okay, again. Now, if you want to get more complicated, the nice thing about these new charts, they'll also let you put text on there, so you can write your own notes and put them on the chart. So keep an eye here. And then we know, and we can write our own notes, and then we can save these charts. And once we do, we don't have to keep rebuilding them over and over. It'll keep everything we set up there on there. Then from there we go to all these other types of technical indicators. If you want to draw Fibonacci's, you want to draw Evans, you want to draw Gann lines. If you want to do all these today, you don't have to figure them out. You could just click on here and it will offer all these different types of systems to you. So if you're using Fibonacci numbers, they're all easily available to you using this, but it depends on how much time and effort you're putting into the charts. Simply, it's relatively easy. It's just practicing and understanding what they are. Then from there we go to two important features you should use, okay, which are nice now that they're available in, let's change this to a line chart. And we can now do comparative. So say we're looking at gold now and we want to add silver. So we can drop silver on that chart and we can see how the two different assets are moving in conjunction with each other. Because we should see gold and silver usually follow each other, or silver follows gold. But lately silver's been diverging from gold and we can see a difference. Or you want to watch Brent oil and crude oil, so you can just drop these on the screens. There's always a way to delete what you had. But now we come to the important part, and that's using technical indicators on charts. And you just find the menu that will give you the technical indicators. And there are three different main areas of technical indicators. You have things like Bollinger Bands, which are actually just dropped directly onto your chart. And then you can customize them. You can come in there, click on where it says, and you can do all the features. So when we teach you the Bollinger Band class, we'll teach you how to set these up and make them so proper. This is a nice Bollinger Band automatic default. Okay. But you can format them any which way you want, and colors and styles, okay, by just finding the line and finding the properties button. Now, that's one indicator. Those are the indicators that fall directly on your charts. Then we have indicators that actually add on the bottom of your charts to give you okay. So we're using something called an indicator now, which is a MACD, which uses divergence and convergence, and it's the number. And this will teach you to take that out, but it drops another chart. It's not an overlay. It's a separate chart where the two numbers, the two moving averages are laid on the chart, and as they move over top of each other, they do something. And then we have the third type of indicator, which we can land chart, which are oscillators, which are based on numeric equations like relative strength index, and they're called bounded indicators because the calculation for that indicator comes out in a number between 0 and 100, and depending on what that number is, it has a certain interpretation. So if we look on here, it automatically drops them on, and you actually see the boundary line. So anything above, this is 75 to 100, is an overbought area, and anything below the 35, or I think 30 in this chart, is an oversold. Okay, and all of this is part of charting because it all is placed on a chart, and all of technical analysis is based on price movement on charts and patterns that you would see on charts. So all of this is slowly building your roadmap, enhancing your roadmap, putting more features and detail on that roadmap, again, to get you where you are going more successfully. And the only way you're going to get familiar with charts is, number one, the basic charts of seeing them and reading them is fairly easy, seeing the numbers and the movement. Okay? And all the charts are relatively the same. After that is getting to use all the different features. And there's no rule of thumb because all the new charting services offer them slightly different. They're all done the same calculation, but you have to find the charting service you're going to use and start to learn it and understand it and find out where all of these things are, because they're all available to you on these charts. Okay. And then you can start using your charts for trading. But first you have to learn it all. You have to practice it. You're not reading a chart. You're not making any interpretation. You're not even making a trading decision. You're just getting used to charts and familiarizing yourself with how an asset's moving and getting to know its personality. It gives you a good starting point. And on that note, I'm going to say goodnight to y'all. Thank you very much for joining us. And hopefully you've learned some basics of charts, because in our next classes, which are the trend is your friend along with support and resistance, which is what is technical analysis, which is channel trading. We have Bollinger Bands for binary options. We have architecture. We are not going to back up. We're going to make the assumption that you know all of this stuff, so that we have in those classes, we're actually starting to build the stuff on the charts, that we understand that you know these basics, because we're going to move you forward, because we can't go back to this 35 or 40 minutes each time in each one of those classes. So you need to practice this, you need to know it, so that when we start advancing you and then you start learning strategies, you can put these on the charts quickly and easily. So on that note, I'm going to say goodnight to everybody. This class has been recorded, so we'll get it up on the site in about a week, so you'll be able to watch it again. And again, I thank you very much, and hopefully I will see you in our classes next week. We have a lot of events coming on next week. We have on Sunday the economics calendar for the week. On Monday, we have trade setups for the week. On Tuesday, we have mastering the platform. On Wednesday, we have the crude oil inventory and technical analysis. I don't know what education class we have on Thursday, and next Friday we have live trading. Tomorrow we also have live trading. So thank you very much for joining us, and have a great trading week. Bye now.